and welcome to Rajput, Jain and Associates. Today in this video, we will be discussing about NBFC, its registration process and difference between NBFCs and banks. First of all, it is very important to know what an NBFC is. In India, the term non-banking financial companies acquires a new meaning and a huge significance. NBFCs are the entities that carry on activities of lending and depositing of money. However, they differ from banks in a major way. NBFCs are fast emerging entities and work as an important segment of Indian financial system. Now, we come to the different types of NBFCs. The NBFCs are categorized based upon their liabilities and activities. So some of types of NBFCs are asset finance company, investment company, loan company, infrastructure finance company, core investment company, microfinance company, housing finance company, and mortgage guarantee company. Now, having discussed about the meaning and different types of NBFCs, we come on to the procedure for incorporation of NBFCs. So before going ahead with the incorporation process, we shall first discuss the prerequisites for incorporating an NBFC. Prerequisites for incorporating an NBFC are: first of all, a company should have registered under the Companies Act 2030 or any other previous company law and should have been incorporated as a private limited or a public limited company. Secondly, the minimum net own funds of the company should be at least rupees 2 crores. Then, at least 1/3 of their directors should be having experience in the field of finance. Also, the CIBIL records of the company should be clean. Then, the company must be having a detailed business plan for the future 5 years. And lastly, the company must be complying with the requirements of capital compliances and FEMA regulation. So, once the company is in conformity with all the above conditions, the authorized signatory of the company shall file an online application on the website of RBI and submit the same along with the documents like KYC of all the shareholders and directors, business profile of all shareholders and directors, fixed deposit certificate issued by the bank, banker report in respect of fund movement of the proposed NBFC. Apart from this, the applicant shall provide net worth certificate, the credit rating report received from a recognized credit rating agency, the educational qualification certificate and experience certificate of the proposed members of the NBFC. Then the related party disclosures, income tax returns of the proposed NBFC and the business plan for future 3 to 5 years. Now, once the application is submitted, a company application number will be generated. Then a hard copy of application shall be sent to the regional branch of the Reserve Bank of India. After the application is properly scrutinized, the license will be given to the company. Now, where an NBFC is incorporated, it has to adhere to certain guidelines. The NBFC cannot receive deposits that are payable on demand. The public deposits which the company can take should be for a minimum time period of 12 months and a maximum time period of 60 months. Then, the interest charged by the company cannot be more than the ceiling prescribed by the RBI, which is updated from time to time. The repayment of any amount taken by the company will not be guaranteed by the RBI. All the information about the company as well as any change in the composition of the company has to be furnished to the RBI. The deposits taken by the public shall be unsecured deposits. Also, the applicant shall provide the audited balance sheet of the previous years. Then, a statutory return on the deposits taken by the company has to be furnished in Form NBS 1 every year. A quarterly return on the liquid asset of the company has to be furnished. A certificate from the auditors has to be taken stating that the company is in a position to pay back all the deposits or money taken from the public. A half-yearly asset liability management return has to be given by the company which has a public deposit of rupees 20 crore and above, or has assets worth rupees 100 crore and above. The credit rating has to be taken from credit rating agency once every 6 months and submitted to the RBI. A minimum level of 15% of public deposit has to be maintained by the company in liquid assets. If the NBFC defaults in the payment of any amount taken, the consumer can go to National Company Law Tribunal or the Consumer Forum to file a suit against the company. As discussed in the starting of our video, NBFCs are quite different from banks. So some of the points of difference are: an NBFC can accept deposits but not in the nature of demand deposit, and hence they cannot raise low cost funds through savings and current accounts. Next, NBFCs cannot issue checks drawn on itself and cannot borrow from RBI like the banks. And NBFC have more flexible structure than bank. Their flexible structure helps in broadening the market by providing the saver and investor a bundle of services on a competitive basis. Next, deposit insurance facility of DICGC is not available to NBFC depositors. However, as compared to banks, NBFCs can take quick decisions, assume greater risks, and tailor-make their services and charges according to the needs of the clients. So, this was all about NBFC and its registration process. In case you need to know more about NBFC, you can contact Rajput, Jain and Associates. Thank you.